Hey guys, remember that 3 weeks ago I told you that I was expecting some kind of local bottom likely to be reached in October or early November? So over the past week, I think we might have already gotten there. That is the local bottom that I was talking about. So if you look at the market behavior over the past weeks, several things, okay? So first of all, crypto market has broken out from over a month of consolidation, and that breakout is pretty strong. And if you look at the equity market over the past week or so or 10 days, we got some negative earnings news from big technology companies like Amazon or Facebook and Snapchat. But market reaction to those really has been pretty mild. And on top of that, you see Thursday we had a pullback in the market, in the equity market. And usually in the bear market, when you have like high volatility situations, right, that kind of pullback, more likely than not, it results in further sell-offs for several days. But in this case, the market actually held up pretty well, and Friday it went up again. So I think we might have been already at this local bottom point. Where do we go from here, though? Next week, we have the FOMC meeting on November 2nd, where the Fed is going to decide the rate path going forward. So I do not expect anything beyond 75 basis point hike because, even though U.S. economy is not bad right now, it is softening, and the Fed wants to engineer some kind of soft landing. So that means you don't want to hammer things down too drastically over the short term. And also, it takes a while for monetary policy to take effect. There is a lag, right? So even though we are not seeing very obvious inflation trend coming down, it may be that the tightening will take a while to take effect. So you don't want to do too much in the short term. That's why I do not expect anything beyond 75. If Fed wants to, signal any kind of further hawkishness, they will likely say, okay, we're going to keep this rate hike tightening path for longer than previously expected. So I expect that's what they may say, but I do not expect the November hike per se to go beyond 75 basis points. So, and to the market, that is no news at all. So we might as well see a continuous rebound after the FOMC meeting next week. So that's my baseline. But again, is this? I said I expect this to be a local bottom, right? So, in other words, I expect it to be a bear market rally in the similar nature of what you see in June, July, August, which that rebound lasted over a month or so, right? So, that is the kind of thing that's my baseline. That's what I expect if we indeed have a local bottom right now. So that means, my baseline is we'll see a rebound likely last somewhere till December. Okay, that's my baseline assumption. In other words, I do not expect this to be some kind of generational bottom, but rather it's a bear market rally. Why is it not a final bottom? Because again, macro environment hasn't changed. We are still in the biggest tightening cycle over the past 2 decades. And if you look at previous serious bear market, how long did they last, right? So the NASDAQ crash, the dot-com crash lasted 2.5 years. The GFC crash after 2008 lasted in a year and a half. Right now, we are about 11 months into the current bear market, right? So I expect this to last somewhere towards the first half of 2023, at least. Okay, so you might argue these cycles are rebounding faster. Cycles are getting shorter because central banks have kind of a built-in tendency to save the market. It has that becomes their natural tendency over time, right? So that's why one of the reasons we are seeing shorter and shorter market cycles. But still, even you take that into account, even if you say, okay, this one maybe lasts shorter than GFC, so it will be less than a year and a half. It will be less than a year and a half. But still, if you look at the past 6 months, the market really hasn't sold off all that much, right? So far, we held up the low of June, July. So the market reaction is really pretty mild so far in the past 6 months. And there is this, in generally speaking, there is a negative correlation between intensity and duration in market cycles. In other words, if you see a really dramatic sell-off, really steep sell-off, you likely see it to rebound much faster compared to if you have a kind of a lukewarm, kind of selling off, but not really that kind of situation. If that's the kind of situation, it may take it longer to actually rebound. So we may be, because we haven't gotten any kind of serious sell-off in the last 6 months. Even if we reach some kind of final market bottom, even if it's a bull market from now on, which I do not expect. That's not my baseline. Okay, but even if that's the case, I expect this to be more of a drawn-out cycle. It's because it's been pretty mild, even given the intensity of monetary policy tightening, given the change of direction, the magnitude of the change of direction in macro environment. Okay, so that's my current baseline assumption is we have a local bottom reached, and we have a bear market rally that can last for several weeks, but this is not a generational bottom. We may see further sell-off, I don't know, in the first half of 2023, and I expect some kind of a final bottom to be reached somewhere in the first half of next year. But even in that scenario, we might not see a very fast rebound from the market. It's just because the negative correlation between intensity and duration of market cycles. Okay, that's all for today. I'll talk to you later. Okay, bye.